Well, this is Rewind 2025. It's been a sluggish year for steel makers across the world. Weak demand, high energy costs, tariff tensions and persistent overcapacity proved to be a heady cocktail for companies world over. However, the new year is bringing fresh hope for the industry. Nigel explains why steel makers are pinning their hopes on a turnaround in 2026.
Well, that's right. The big question is what's in store for steel in 2026? Well, in the near term, steel prices, they have weakened, and that's likely to weigh on margins for steel companies just in the near term. In India, the hot rolled coil prices, they're down by roughly around 8% from the September quarter. That's driven by lower Asian prices as well as the expiry of the interim 12% safeguard duty, which happened in early November. But that's where things start to get a little bit more interesting. Now, there are growing hopes that steel prices may be close to the bottom. And they say this because Asian steel spreads, well, they are at near 15-year lows, almost 40% below their long-term averages. At these prices, these levels, spreads, well, they look unsustainable. And part of the street is optimistic of a recovery, especially if China's anti-involution policy leads to production or supply cuts. Now, let's turn our attention to the largest steel producer, which is China. China's steel production is down by close to 3 to around 4% year to date. But exports, they're up by around 6.5 to around 7%, and they remain elevated because Chinese demand has been weak. In fact, Chinese exports have crossed 100 million tons in the first 11 months of 2025 itself, and that continues to put pressure on steel prices. Turning to India, well, India's steel consumption has grown by around 11 to around 12% CAGR over the last 4 years, and growth of around 7 to 8% is expected in the times to come. At the same time, Indian steel companies, well, they are adding capacity, which means demand needs to keep pace to avoid oversupply. And that brings us to a key policy trigger. With Chinese exports high and export options limited, well, steel companies are hoping for the reintroduction of safeguard duty that expired in November 2025. Earlier in 2025, remember, the interim 12% safeguard duty helped domestic HRC prices trade at roughly around 9% premium to landed imports. But once that duty expired in November, prices, well, they have quickly converged with import levels. If safeguard duty returns, well, they could provide the much needed support to domestic steel prices. So heading into 2026, steel, well, it faces near-term pressure, but the setup could hopefully slowly improve with spreads near the bottom. Policy support will be in focus, and demand growth, as always, will be the key swing factor.
Well, thanks very much, Nigel. Will it be a